Good morning, good morning, everyone. How are you doing? All I hope you are doing well. So the market has been slow these days because of December. You get it? The market is really slow these days because you are in December. So please kindly adapt. You get it? You need to adapt. You need to adapt with the condition of the market these days. Yeah, so as I'm saying, the market has been slow these days. You get it? Because of the condition, because of the times that you are in, because of the times that you are in. But we still need to show up. We still need to show up. We still need to show up. All right. Good morning, everyone. Welcome back to the stream. I'm hoping the network will be. Let's hope the network will be stable today. Yeah. So once again, good morning. We are live. So I hope you people can hear me. I hope you people can hear me. So where are you listening from? Okay. If you can hear me, type in one in the chat box. If you can hear me, type in one in the chat box. If you can hear me on YouTube. Okay. If my network is clear, if everything is okay, type in one in the chat. Okay, that means you people can hear me. All right. Okay. So today is 11th of December 2024. So the year is getting close to the end. You get it. So mostly when the year is getting close to the end, what you see, it's not even advisable to be participating in the market. It's not even advisable because the market is kind of slow. You don't get slow move in the market, and as you have been saying, the market participants, those who participate in the major players in the market are the ones who move prices. You get it. Those are the ones who move the exchange rate. They move prices. So if they are inactive in the market, mostly we get slow movements in price. You get it. Mostly price doesn't move a lot like that. So it's always preferable if you are trading during when they are active. So that's why we always trade when the market is active. We trade when there's active market section. So the active market section is maybe during the various market sessions, like maybe the Asian session, which includes the various sub sessions like the Auckland or the Sydney sessions, and the London session too, which also comprises of maybe the Frankfurt and the London session as well, and the New York session too as well. So it's always important we trade during that times, because when the market is inactive, one thing you need to understand is that's why the time that you enter the market matters. If you enter at the wrong time of the market, you are going to be losing money. You get it. If you enter the market at the wrong time, and you are going to lose money. So it's always important you enter the market when it is active. Okay, so we're having major players in the market, the major players being active in the market. That's the most important time you need to enter the market. But if the market is inactive, you mostly get a lot of price doesn't move a lot. Okay, so as I've been saying always, these candles that you are seeing on the chart represent these candles you are seeing on the chart represent various price actions. Okay, these are volumes, these are orders. So you need to take note of that. You get it? You need to take note of that. Those buying and selling, you need to take note of that. So the prices, people, if you don't have liquidity, so liquidity simply means when we have a lot of people, when we're having a lot of activities going on in the market. So liquidity simply means when you have a lot of people buying and selling a currency pair in the forex market. When we have a lot of people buying and selling a currency pair, that means we're having a liquidity. The market is very liquid. You get it? So when the market is inactive, when the market is not liquid, we normally see a slow movement hitting. People are not buying and selling same currency pair. So it's always important you participate in the market when a lot of people are buying and selling same currency pair. So that's why we are seeing slow moves in price. You are not seeing massive movement in price. So that's the reason. Okay, so let's look at, so first of all, before you analyze the market, you need to first of all, we look at the fundamental aspect and the technical aspect. You get it? To make our decision. So let's look at the fundamental aspect and see So when I come to the market early morning, these are the things that I normally do. So when I come to the market, I normally check out my fundamentals. I check the fundamentals. So today is Wednesday 11th. Okay. So if I bring out all the, because normally these ones are not impactful. If I bring out all the filters, you are going to be seeing an apply filter. I'm going to be seeing the various economic news. So these are the various news events that will be happening. So today is Wednesday. So you don't have any high impact news today. So you don't have any high impact news today. So mostly the red ones are the most important things to me. So I can just take it out to filter out the noise. So I've taken it out. So these are the various major. So today we are going to be having core CPI. We are going to be having CPI2. We are going to be having CPI year by year base and Bank of Canada rate statement. So during the New York session, the market is going to be very active. You get it? During the New York session, the market is going to be very active. So if you are trading during the New York session, so CPI simply means consumer price index. So it's the same as an inflation data. Okay, it's almost the same as inflation data. So these are the various numbers that they are expecting. 0.3. So mostly the core CPI is the most impactful one. So they are expecting the same numbers. Okay, if you watch the previous one with the forecasted one, they are expecting the same numbers. So the forecasted one is 0.3%. The previous one, this is the previous actual data that happened, was 0.3. So the actual data for the last 2 months was 0.3. And now, based on analyst data, or based on what analysts their data collected, this is what they expect. So they are expecting the same numbers as compared to the previous numbers. So when it happens like that, we are going to be having indecision in the market. So the market can move both ways. It can either buy or sell. Okay. So when the numbers are the same, I normally don't make decisions on that, because it's going to be very hard for you to make decision, because the numbers are the same. So core CPI is 0.3, 0.3. That's what they are expecting. So the actual hasn't been released yet. So you are going to be waiting for the actual. So during the New York session, it's going to be very chaotic. It's going to be very liquid during the New York session. So you need to pay attention to that. So I think the safer time to trade, the safer time to when you get an entry, you are going to be executing is during the lending session. Lending session, you don't have any high impact news. So that's the best times you need to take an entry. So Thursday to on during the lending session, you are going to be having a lot of You are going to be having a lot of news events. You are going to be having CHF news events, a lot of news events during the lending session. Okay, you are going to be having interest rates on CHF, and at the same time, you're going to be having interest rates on Euro. So Thursday to tomorrow during the lending session too, you are going to be having a lot of news events. You get it? So that's it for the fundamental. So it's very, very always important, because as I've always been saying, what is going on in the currency has a major impact on the currency too as well. So you need to pay attention to what is happening in the country, so that you don't miss out to anything. Okay, you don't miss out to anything. So the fundamentals are very important. You don't have to go without looking at the fundamentals. Other than that, you are going to be kicked out unexpectedly. So the fundamentals are so you can do your analysis, you can do everything all right, but if the fundamentals, you are not looking at the fundamentals, as I said, you are going to be stopped out most often. So it's always important you check out the fundamentals and you combine it as a confluence to make your decision. So let's try and break down the chart and see what's happening. So as I've been saying, it's always the same thing that you are going to be doing, same thing every day. But when it comes to trading, if you get system that works for you, if you get a strategy that is going to work for you, that's all. You don't do any other work than what increasing your lot sizes. The money that you are going to be getting from the market is what is going to increase. By the rest, you are not going to amend or change anything. It's going to remain the same. So the systems are the same, the applications, the ideas are all the same. But the only thing that changes, the only thing that differs is what? Your lot size. Your lot size is what is going to change. So let's look at the pound dollar and see what is going to happen. So not every day that when you come to the market you need to expect to trade. Some days you come to the market, you just learn, you watch the movement. Other days, so on the monthly time frame, I think this season the only pair that is moving very smooth is gold. Gold yesterday moved very well. So let me analyze gold really moving very. It was just trending. Okay, so gold is sometimes it's very simple to trade, but one thing is what one thing that happens most often is what maybe you will get stopped out and it will move in your favor. That's the only problem. But gold really moves to close market structure. You get it? So yesterday you see this was up down. It wasn't supposed to, like, it wasn't something expected. You get it? So as the candle broke, I was expecting this week to fill because all the time frames are pointing up. The daily was an uptrend, the weekly is an uptrend. So I think the weekly is kind of rangy, but the weekly looks like a downtrend. The daily time frame too was an uptrend. H4 time frame too was an uptrend. So all the time frames were pointing up. So I was expecting this one to continue, but what happened is what it got retraced and this one moved up. So as this one moved up, price retested on this level. So I'm expecting, so it really moved very, very well. Gold really moved very, very well during the New York City. You get it? It moved very well. So I think gold really moves well. It moves well. So let's try and break it down and see what we are going to be expecting today. So this is gold during the monthly session, monthly time frame. So on the monthly time frame, this is what you are expecting. On the monthly time frame, you are having this resistance over here. So we do what you call top-down analysis. We analyze from the higher time frame to the lower time frame to see what is happening. You get it? To see what is happening. So on the monthly time frame, you're having this resistance over here. So if you can see the past data, this is it. You get it? You can see it very well. Gold is trending up. Gold is really trending. Gold is trending up on the month. Made a pullback. Okay, price trended up. Made a pullback. Now what's moving up? So the monthly time frame is an uptrend. So when I'm doing my analysis, I analyze from the higher time frame straight towards the lower time frame to see what is happening at the other time frames as well. So when we talk about time frames are the times that mostly the candles forms. So you need to pay attention to. So time frames are the times that the candle forms. Candle opens and a candle closes. Okay, so the monthly time frame, you can see it is the price has been what, being a bullish trend. Price has been moving up. So moving to the weekly time frame to get it at the weekly time frame, the market was trending up. Price made higher high, higher low, higher well. You can see that price is really trending. So the weekly time frame is what? The weekly time frame is a downtrend. You get it's kind of very confusing, but if one of an experience, you can see it very well that it's a down high. It's ranging to as well. So moving to the weekly time frame, so that's rejectional levels. So we had a resistance over here. We're having the support over here. We're having another support. We're having another support over here. You get it? So after identifying the trend, what it is demanded from you is what? Identifying the various rejectional levels. You get it? Identifying the various rejectional levels. So this is the only thing that I'll be doing at the weekly time frame. Identify and plot out the various rejectional levels. Okay. So the daily time frame, let's move to the daily time frame. So it is very important. So mostly we have something called confluence. We have something called confluence. So confluence is what? Confluence is what, when we combine multiple time frames together to what? Make our decision. So the daily time frame we're having. So let's first of all bring out the various confluences. So what are the various confluences? So the confluence. So the daily time frame. What's the trend for the daily time frame? The trend for the daily time frame is what? An uptrend. The trend is what? An uptrend. So what's the trend for the H4 time frame? The H4 time frame too. So the daily time frame is an uptrend in the sense that price was doing lower low. Price was trending down. If you look left, the past data price was trending down. An uptrend. You get it? It tends towards an uptrend. So the moment this one, so the daily time frame itself is what? An uptrend. So moving to, so as price has broken out, we're expecting a retracement. You're expecting a retracement for price to what? So these are the various rejectional level at the daily time frame. Certain as price has broken out in that. So when you look at the trend is what? An uptrend at the daily time frame. So let's get to the H4 time frame and see what's happening at the H4 time frame. So with the various confluences, you notice that the daily time frame is what? An uptrend, H4 time frame. So let's look at the trend at the H4 time. So price broke out at the H4 time frame. Price has broken out, so you're expecting a pull. So price has broken out. So price has broken out, so you're expecting a pullback. So it's pulled back. It was supposed. So you see, the moment price got to this side, it got rejected. You can see the wick of the candle. Price really got rejected. See, price has gotten rejected. You can see it very well. So that's it. So what I'm expecting to happen on gold is what? Currently price is what's heading towards this rejectional level. So as price is heading towards this rejectional level, you can't take a buy when price is what? Close to this rejectional level. It's not advisable you take a buy when price is close to this rejectional level. Even though the trend is an uptrend, but what we have to wait for, you wait for price to break above this level. When price break above this level, then what? We take a continuation. Like what happened yesterday, the same thing happened. The same thing happened yesterday. So you see, as price broke out yesterday, the trend continued to the next rejectional level. Okay, it was supposed to continue to the next. So the same thing over when price broke out, price head to the next rejectional level. So it's the same thing that I'm expecting it to happen. So now I have to, before I would take a buy, I need to wait for price to what? Break out this. Price should break out from this rejectional level. Then what? We go in for a buy. You get it? We need to wait for price to break out from this rejectional level. Then we take in, or we take a what? A buy. That's the most important thing we need to. Okay, so currently price is close to the rejectional level, and if you are taking a buy, you need to first of all calculate the pip range, considering your what? Considering your risks to the reward you are going to be getting from this trade. It's not something that worth it. It's not something you need to go for. Okay, so if you take a buy now, you have to ask yourself, where are you going to place your stop loss in case maybe price doesn't go according to where you're expecting it to go? Where are you going to place your stop loss? You get it? So looking at the stop loss, it's bigger than what? Your reward. Looking at what? Looking at your returns, or looking at the amount you are risking in the market, your reward is very small comparing it to your risks. You get it? So it is not something that I would advise you to take, even though you know price is going to move up. But I want price, this H4 candle should break below this one. If the H4 candle breaks, if it breaks below this one, then you're going for a buy. That's the best way to go by this one. So that's what I'm expecting on gold. So gold, mostly the best way to trade gold is what? Waiting for the H4 time frame to align. If you get a clear trending market on what? The H4 time frame, I think you are going to be milking gold, because yesterday, for instance, it's really trended well. It's really trended well on what? Gold. So now what you can do is what? You need to wait for price to break above this one. If it breaks above this one, then you can go in for a buy. I think that would be the best way to go. That's the best way to go. So that's it for gold. But for now, there's no entry for me on gold, because price is currently heading towards a rejectional level, and the chances that it will get rejected, and price will continue down is very high. So let's move to GU and see if there's an opportunity. So the market has been consolidating these days. The market has really been consolidating this. So let's move to the monthly time frame and see. Let's move to the monthly time frame and see what's happening. So this is GBP USD. So if I'm doing my analysis, this is what I do. So you have multiple time frames. So different types of time frames that you normally what based on our analysis. So mostly I focus on what the higher time frame to the lower time frame. I analyze from the higher time frame to what the lower time frame. So the higher time frame I'm going to be focusing on, or I'm going to be what to be basing on for my analysis is the monthly time frame. So on the monthly time frame, we're having this various rejectional level. We're having this rejectional level. We're having another rejectional level right here. So you see, as price was trending up, price was making more of what higher highs, higher lows, higher high. Price was trending up. You get to the moment this one broke, it tends to what a downtrend. The moment it breaks this one, it tends to a downtrend. Price moved, retraced. When it was a downtrend, it retraced, moved up again. Price was kind of consolidating. So the moment this candle broke this one, price now tends to what an uptrend at the monthly time frame. You get it, price tends to an uptrend. So it is very important when you are starting out, it is very important to know the market structure. Market structure is very, very important. If you understand market structure, I think your clarity on how to read the market, your clarity on how the market works is going to be what it's going to get better. So it's important you master market structure. So as price moved up, price tends what an uptrend. You get it. So those who are here who want to join the boot camp, it's still ongoing. You've not got into the advanced session. You get it. You've not got into the advanced session. So it's always important. If you want to join, you can still register and join the ongoing boot camp. A lot of knowledge is being shared over there. And I think by the time you finish with the boot camp, you can see the clarity, you can analyze the market yourself and make decision without relying on anyone. So the monthly time frame, these are the various. So if you want to register, you can chat me up on WhatsApp. So this is my WhatsApp number. So you can chat me on WhatsApp and what you register for the bootcamp. So on the monthly time frame, these are the various rejectional levels. You get it. So the moment I think price, the body of the candle has broken above this level. So now this one is no more valid again. So these are the various rejectional levels. These are the so those who want to register for the bootcamp, my number, the number that you want to book your use it to book your seats, the number has been sent on WhatsApp, so you can use the number to register. You can use the number to register. So it is very, very important to understand market structure when it comes to reading the market. It is very, very important you understand market structure. If you get it wrong, you are going to be at the wrong side of the market. And you know what? When you be at the wrong side of the market, you know what will happen to you. You are rather going to lose money. You get it? You are going to be losing money. So you need to make sure you've mastered market structure. It is very, very important. Okay. So that's it for the monthly time frame. So let's move to the weekly time frame and see. So on the weekly time frame, we're having this resistance level over here at the weekly time frame. We're having these various rejectional levels. So moving to the daily time frame. So on the daily time frame, what is the trend on the daily time frame? So now you can see the weekly time frame trend is what? A downtrend. The weekly time frame trend. The weekly time frame trend is what? A downtrend. The weekly time frame trend, and price is currently what? Sitting on this resistance level. So let's move to the daily time frame. So what's the daily time frame doing? What is the daily time frame doing? So what's the trend for the daily time frame? You can see it's very clear that the daily time frame trend, price moved, price made price made high, came back, made lower low, price made high, price made lower low. So price is currently what? An uptrend at the what? Daily time frame. So the moment this one broke, price made what? A higher high. You get it? So price is currently sitting, or price is currently hovering around that resistance level that we drew. You get it? And if you read the candles, if you are reading the candles, you can see that the previous candle, this candle has broken the previous candle. You can see it over here. You can see it over here that the previous candle has been broken. You get it? The previous candle has been broken. So it is telling you that what? Candle structure is now also what? An uptrend. You get it? So the daily time frame, the daily time frame is what? The daily time frame is what? An uptrend. The daily time frame is what? Currently an uptrend. You get it? So now weekly is a downtrend, daily is what? An uptrend. So let's look left and see the various rejectional level. If price is moving up, you can see the various rejectional levels. You get it? Various, you're having clean zone. So if price is moving up, there's nothing going to distract price. Price is going to move freely without thoughts or resistances around this level. So when price is moving in such area, we are not going to be having any hindrance. So let's look at the H4. So what's the trend at the H4 time frame? What's the trend at the H4 time frame? So the trend at the H4 time frame, price is currently making what? More of what? Higher highs, price made higher low. So yesterday when we did the analysis, I was expecting price to close the body of the candle to close at this point, very small at this point. If price close around this point and you take a buy, but what happened is what? Price just spike. Okay, it didn't close, maybe it didn't give us a very small, but the price just spiked through. Okay, so exactly the analysis that we did, it played out perfectly well. The analysis we did yesterday, it played out perfectly well. Price broke through. So but what I was expecting is what? Price to make a small break. Okay, if price make a small break, then what? It will continue. So I'm expecting this is the various rejectional level. So when I see market structure like this, do you know what I'm going to be waiting for? Currently price is on this rejectional level. So this is what I think, the monthly time frame or the weekly time frame. So this is the weekly time frame. So you can see price is getting rejected at that level at the weekly time frame. So it tells you how strong, and the higher the time frame, the stronger the rejectional level. Please take note. The higher the time frame, the stronger the rejectional level. So this is weekly time frame, and it is not any other time frame than what? The weekly time frame. So it is very important you take note of that. You get it? it is very important you pay attention to the level. So this is weekly time frame, but the monthly time frame, what happened is what? What happened at the monthly time frame? The candle just broke, made a retest. So if price is coming down, you can see, looking at left, the candle has already broken that rejectional level. You get it? The candle has broken what? Below that level. So that means this level is no more important again. This candle has already invalidated this level, so it's no more valid again. So when you come to the weekly time frame, you can see, as price broke out, when price break out, you're expecting what? Mostly we expect a retest. So as price has broken out from this zone, when price was breaking, it broke out from the zone, broke out from the zone. So as it has broken out, this zone is valid, this zone is valid, this zone is valid. Okay, so it's what? It retraces fully to 100%. So the only way the trend is going to change to an uptrend is when price has broken through. But within these ranges, it's still what? It's still a downtrend. So this is the point price got rejected. Price has been rejected at this level. So the daily time frame, the candle has broken through the zone. You get it? But we are not going to base our decision on the weekly time frame, because the weekly time frame is for mostly those who are holding for long, those who focus, like who trade for a very long time. So normally I don't pay attention to the weekly, but I normally use it as a confluence. If it aligns with the time frame that I'm focusing my trend on, it's also what? It's a plus. But I'm not going to rely solely on those time frame. So moving to the H4 time frame. H4 time frame, price broke out, made a retest. Price was consolidating around this level. You get it? So the daily time frame, we notice that the daily time frame is what? An uptrend. Price is currently on this key level. Okay, you see how important this level is. So when you look left, you can see this candle tried to break, got rejected, came down. This candle tried to break and came down. So the only candle that broke is this candle at the daily time frame. So this candle has broken it above this one. What we are expecting is what? A retest, and the trend will what? Continue. You get it? So now this candle has broken above. So we are expecting a retest. So let's move to the H4 time frame. So normally we don't make our decision on only the daily time frame. We combine it with the other time frame. So moving to the H4 time frame. So the daily time frame is an uptrend. So before I'll make a decision, what I'm going to do is what? I'm going to wait for this candle to close on this level. I'm going to wait for the candle to close on this level. Okay. When the candle close on this level, then I'll go towards, because when this candle close on this level, that means there's no entry. So the entry where I'm going to be searching for my entry is the lower time frame, because when price is coming down, it is going to get rejected too at this level at the same time. So we're having this strong zone over here. Okay, but this zone is no trade zone. This zone is no trade zone. This is no trade zone. No trade zone. So I'm expecting price to get rejected in this zone. If price gets rejected in this zone, then I'll be looking for an entry at the H1 time frame. So when H1 time frame shifts trend towards an uptrend like this, okay. So when the market shift trend to an uptrend, it's going to be in line with what the daily time frame is going to be an uptrend. The H4 is going to be an uptrend. H1 2 is going to be an uptrend. That is when I will take a buy. You get it? That is when I'm going to take a buy. So if you move to the 30 minutes, so I'll wait for either the H4, the H1 or M30 to shift trend. If it shift trend to an uptrend, then I'll be going in for a buy. But if price breaks below, then there's no entry for me. You get it? If price break below, there's not going to be an entry for me. So price is going to get rejected on this level as well. So if the candle breaks below this one, so if the candle breaks below this one, if the candle breaks below this one, something like this, you get it? If the candle breaks below this one, that means what? The structure has been invalidated. That means the structure has been invalidated. If the candle, the body of the candle breaks below, then structure has been what? Has been invalidated. The structure has been invalidated. So what I would love to see before I'll take a buy is what? The candle, this H4 candle should break, maybe it should break something, should do something like this. As you are seeing this long wick like this, I want the body of the candle, I want to see the body of the candle breaking below this one. If the body of the candle breaks below this one, you see now the body of the candle is going to hit on this zone. If the body of the candle goes within on this level, then what? I'll be going in for a buy. So this is what I'll be expecting it to. This is what I'll be expecting it to happen. So if the body of the candle close on this level, the next candle breaking above, then I'll be going in for a buy. So that's what I'll be expecting it to happen. So something of that sort is when I'm going. So this big move. So don't get worried about this big move. Oh, will this thing happen? Most of the times when this big move happens, what you are normally going to see is what you're just going to create a wick, like what I've done it over here. Sometimes it will just create a wick and the body of the candle will close below this zone because this zone is very strong. But I don't predict it. I normally react to the market. Okay, so I'm not going to say, oh, compulsory by force price is going to move up. That's why I don't use the sell limit and the buy limits. I normally use instant execution or buy stop or sell stop. Okay, so I'm not going to force things. I just want price to close. If price close, fine. If price hasn't closed, I'm not going to make out. I'm not going to take an action. That's what I'm going to be waiting for. So this point is what no trade zone. So I'm waiting for price. If price breaks through, you'll find an entry. Okay, if price breaks below, then I think we can find an entry. But currently, this level is kind of in a consolidation. So if price breaks above this one, I think you have a sell opportunity over here, 23 pips, which is not bad. So we are going to be waiting. So around 10 o'clock is when this candle is going to close. So if this candle close below this one, I think we can find a sell entry. But it depends on how the candle two is going to close. Okay, you can't take, if the body of the candle close below this one, you can't go in for a sell, because where you are going to place your stop loss is going to be very wide. If the body of this candle close below this one, where, so with such buy you can't take it. So what you can do is what, you wait for a pullback. You wait for a pullback. After the pullback, then what, you look for a sell. Then you wait for what, you look for a sell. You go in for a sell. That's what sometimes it will happen. So maybe around 10, yeah, maybe during the New York session is when it's going to happen. And you know what is going to happen during the New York session too? You are going to be having CPI, a lot of news events. You're going to be having a lot of news events at 1:30, 2:45. So a lot of news events. So this is what I'll be expecting in case maybe price breaks below. This is what I would love to see on the charts. You get it? This is what I would love to see on the charts. So that is GBP USD. If price breaks below, then I'll look for a buy opportunity. If price breaks below, if price breaks up close above, then I'll look for a buy opportunity. If price breaks below, then I'll also be looking for a retracement. Then I'll go in for a sell. So that's what I would love to see. So USD CHF, let's analyze USD CHF and see what's happening. So if you have any question, you can drop it in the chat box. On YouTube, if you have any question, you can drop it in the chat box. So when you look at the monthly time frame, on the monthly time frame on USD CHF, we're having this rejectional level over here. You're having this rejectional level too over here. So looking at the weekly time frame, price is currently what? Price is currently an uptrend. Price broke out, made a retest, price broke out. So the weekly time frame trend is what? An uptrend. Price is an uptrend at the weekly time frame. So we have a support tool over here. So looking at the daily time frame, on the daily time frame, price is what? Price was initially an uptrend. Price made up, higher high, higher low, higher high, higher low. Okay, so impulse correction, impulse correction, impulse. Okay, so impulse means price is in what? In the direction of the main trend. If price correct or pull back, that means what? It is against the main trend. So impulse in the direction of the trend, correction against the direction of the trend, impulse in the direction of the trend, correction against the direction of the trend, impulse in the direction of the trend, correction against the direction of the market. You get it? So price was in an uptrend at this point. Price was trending up. So the moment this one broke, price turned to what? A downtrend, consolidated for some time over here. Consolidated for some time over here. So currently, price is pulling back. So let's identify the various rejectional levels. So if price is coming up, price is going to get rejected on this level. Price is going to get rejected at that level. Moving on the daily time frame, price is also going to get rejected at this level. So the daily trend is what? When it comes to USDCHF, the daily trend is what? An uptrend, a downtrend. So price broke out, made a rate test. Price broke out. Is currently making what? A rate test. You get it? Price is currently making a rate test. So let's look at the H4 time frame. At the H4 time frame, there's what? This rejectional level too over here. So the daily time frame is a downtrend, but H4 is what? Trending up. H4 is trending up. So it's also heading towards what? This rejectional level. Price is currently heading towards this rejectional level. You get it? So when you see something like this, you don't have to what? I've been saying it always. Even though you know like what is happening on gold, that as I said, it is currently what is. So you see price is getting rejected by the level. The moment price is heading up, why is it getting rejected? Because you're having multiple rejection levels. You're having this multiple rejectional levels. So that's why gold is getting rejected at this level. Rejection. So you see, as price, when you look left over here, when price was heading up, because there was no support or resistances, price was moving smoothly. You get it? Price is going to move smoothly. If you look at this one too, price also moves smoothly when you go to this side. You get it? So it's the same thing that is going to happen on GBP, USD, USD CHF rather. So currently price is trending up, but we think we can't take a buy because price is currently what? On this rejectional level. You get it? So it is, so you don't have to be buying when price is on what? A resistance. You don't have to sell when price is on a support. So currently price is on this resistance level. So don't buy. Don't buy. You get it? Don't, don't buy when price is on a support. Don't buy when price is on don't sell when price is on a resistance. Don't buy when price is on a resistance. Price is close to resistance. So currently price is close to a resistance. You don't have to what? You don't have to sell. Sorry, you don't have to buy. Wait for price to break and close above before you take a sell. And wait when price is getting close to this one too. Don't sell. Wait for price to break out before you make a decision. So that's what you need to be doing. Okay. So price is currently breaking. So this one can just be a wick. So you can see on gold, we had something like that. So you see on gold, when gold was moving up, the moment it got to this rejectional level, gold got rejected. The price got rejected. You get it? It got rejected and price decided to what? Pull back. You get it? Price decided to pull back. Price was trying to move up, got rejected and was pulled back. You get it? So don't buy when price is close to a resistance. Don't sell when price is close to what? A support, for the sake of your account. Okay. So that's what you need to be doing. So that's it for USD. So we are going to take a buy only when price has broken above this one. When price break above this one, when price breaks above this one, then what? Then we go in for a buy. So something like this. Then we look for. So then we take a buy over here. Okay, so this is what I'm expecting it to happen on gold, USD. When price breaks above this one, then but the market is kind of it's kind of slow these days. It has been slow these days. We are not getting clear market structure. We are not getting clear trending market. So you need to be patient at this times of the day. So you see, November, December has been very bad. So these times of the day are the times that you need to be very. So you see, yesterday the analysis I did on Bitcoin, BTC USD, you see, it played out perfectly. You get the price came down and what? After price got to the level, after price got to this rejectional level, you see how price got rejected. So those levels are very important. You get it? Those levels are very, very important. You see how price got rejected at the level and it continued up again. So it's always important to pay attention to those levels. It's very, very important. Anytime price will get there, it will get rejected as it got rejected over here, and price decided to move up. So it's the same thing that is happening over here. So don't rush to take a buy, okay? Because the moment you see price is moving up, so you said, oh, price is going to move up, then what? You just jump into the trade. Wait for price to settle down. So currently, price is on this rejectional level. Price is currently on this rejectional level. So the chances that price is going to retrace is very high. So these are the places that you will have to take position. So you see these places, these are the zones. You see perfectly. You see as price was moving up, because there was no support or resistances, price was moving smoothly. You get it? Smoothly. Price just move to the zone, to close to the zone. So that's what you need to be doing. So currently price is on this zone. So what I would advise you to do if you are going to take a position, what I'm going to be doing is what I'm going to wait for price to close this level. So it can just when the candle is still in session, it can be looking at it is moving, but what it can just retrace. So wait for price to get to this level, then what if it breaks, then you take the continuation. If it retrace, then you wait for price to still close, then what you take a position. That's what I would advise everyone to be doing. That's what I would advise everyone to be doing. So let's look at USD card. So you see USD card, yesterday analysis that we did, USD card is still hovering around the zone that we indicated. So it's now getting close to the target. It's now getting to the targets we drew. So I think this morning there was an even a trade opportunity over here. There was a trade opportunity on USD card. Yeah, there was a perfect trade opportunity. But the zone, looking at the zone, so these are the trades that I would take it anytime it happens. So 9 pips. Yeah, it was looking good. Wow. Perfect. USD card was looking good this morning. So let's analyze. So I didn't check it early. There was a trade opportunity on USD card. Wow. It was perfect trade setup. So looking at the monthly time frame, there was an looking at the monthly time frame, there was a resistance over here. Looking at the weekly time frame, the weekly trend is what? So since we started the week, USD card has been trending up. Price trended. There was what? So price is trending up. So looking left, let's identify our various rejectional levels and see. There was a rejectional level at this point at the weekly time frame. There was another rejectional level too at this point. There was a rejectional level too at this point. So looking at the daily time frame, so looking left, you need to move price action to your left and see. So this is the current market price. So price is no near close to that support. So moving to the H4 time frame. So you see the weekly time frame is what? The weekly time frame. The weekly time frame. The weekly is an uptrend. The trend was an uptrend. Looking at the daily time frame. The daily time frame is also what? The daily time price moved up. Price moved up, lower low, price moved up. Price was trending what? Price is in what? An uptrend. So looking at the daily time frame, the daily time frame trend is what? Also an uptrend. You get it? It's an uptrend because price was making more of what? Higher highs and higher lows. You get it? So now the trend is what? An uptrend. So there was a clear opportunity on USD card this morning. A very clear opportunity. So that's why you need to what? Have a pair that you are trading. So it's supposed to maybe this is a pair that I've been trading. It's a pair that I've been trading. I'll be monitoring it since this dawn time. So there was no way I'm going to miss a pair that I trade more often. I'm always having a look at them. So you need to select some few pairs and master them so that you don't miss opportunity, because you're having a lot of currency pairs in the market. You can't trade all the currency pairs. If you focus on a lot of currency pairs, you are going to be missing out. Okay, so have a specific currency pairs, either 2 or 3 of them. And if you're having a lot of currency pairs in your watch list too, you are going to be over trading, and over trading too is going to cost your account. It's going to harm your account. The moment you take more trades, if you take more trades, it even affects your mindset. It affects your psychology. Okay, the more decisions you are making in the market, the more you become very skeptical, the more you become very scared on taking trades and other stuff. So have some few pairs that you are going to be following, okay, so that you don't miss trades on that more often. So if suppose maybe if a USD card is a pair that I trade, I will be what? If it's a pair that I've been trading, I wouldn't have missed this opportunity. I'll be having an eye on, because I don't trade it. I don't normally monitor it because I was analyzing it for people who normally watch it. So the daily time frame is an uptrend. So where was the opportunity? Let's look at the H4 time frame. So the H4 time frame through the trend is what? The H4 time frame, price moved up, made a retracement, price moved up. Price was consolidating over here. Still what? The low was being maintained, the high was being maintained. So the trend is still what? An uptrend at the daily time frame. So you see all the time frames from weekly time frame to what? From weekly time frame, from the weekly time frame to H4 time frame are all in the same direction. So when you see something of this sort, don't sell. When you see something of this sort, don't sell. If you sell, price is just making a pullback, and the pullback is not going to last for long. You are going to be kicked out. So look for a buy. So where did I see the opportunity? So this was the opportunity. Price broke out, made a red test on the level. You get it? Price made a red test exactly on the level. You get it? And as price made a red test, it created a resistance to over here. Price is now creating a resistance to over here. And one thing, where do you see the opportunity? The price has created multiple rejectional level. So now this zone has become very strong zone. You get it? Now price has created a support for you. So this was the 6 o'clock candle. When the 6 o'clock candle opens, so you see a nice, wow, the setup was looking saucy, looking spicy. So these are the trades that I normally love taking it. These are the trades that I normally look for taking it. You get it? These are the trades. This point will be my first take profit. This and what? This will be my second take profit. Price was looking nice. So this is the point I would have seek confirmation. So the moment price broke above this one, okay, so this will be my stop loss, the next structure level. So this is the points I would take. So this kind of trade, these are the trades that I will be taking every day. So the same trade. So trading is all about recognition of what? It's all about recognition of the pattern. So this same trade happens on GBP USD on 10th April. I think 10th April also. 10th April 2024. 10th April. Let me show it to you. So you see, you have to be able to recognize patterns. Yeah, okay. It's also happened on 30th September. So this trade, if you can have, remember, price broke out, made a red test. What happened? Trend continuation. It's the same thing happening on what? USD CHF. Is the same thing happening on USD card rather. The same thing happening on USD card. So you see price broke out. So let me show you the trade GBP USD on 30th September. So let's try and what? Make that confluence. I didn't even check. So this is not a pair I trade. So you see the setup over here and watch the setup over here. See, they are the same. So the setup over here, price broke out, made a red test, created a support. What happened? Trend continuation. So the same thing over here, price broke out, made a red test, trend continuation. So you need to train your eyes for you to be able to see the pattern. Okay, a lot of people are not taking notes. A lot of people are not taking trading. If you take trading seriously, you see the patterns repeat itself every day. Okay, so the reason why I'm saying, the moment I saw it, I said, this pattern, I've seen it happening, and I've been able to remember the day. And I said 10th April to the same thing happened. So you see, I you need to be able train your eyes to be able to remember the pattern, recognize the pattern. That's the most important thing. So let me show you 10 table to yeah, okay, it was, yeah, 9th April, 10th April rather. So you see this one too. So this is the pattern. So it's the same thing on US. It broke out, made a red test, trend continuation. So I remember even was looking juicy. Very nice setup this morning with the card. And the H4, H1 structure, H1 was so all the time frames are uptrend. Looking from the weekly time frame, weekly is an uptrend, daily is an uptrend, H4 is an uptrend, H1 is an uptrend. H1 2 is what, an uptrend. Okay, so these are the setups. I call it A plus setup. So with this one, I go in with my 4 rigs. Okay, if my plan is to risk 2% a day, I'm going to risk the 2% on this trade because the setup looks very good. This is a money setup. So price has broken out, created a nice rejectional level, and what, an engulfing candle. Price, the candle engulfed the previous candle, and price is just continuing. So it's really looking good. It's really looking good on USD card. It's really looking good on USD. So you need to have some specific pairs that you focus on. Have some pairs that you normally focus on. Then what? Because USD card is not part of my pairs that I trade, so that's why I even miss it, because everything was looking good. If you look at the 30 minutes, the 30-minute too was very perfect. It was very perfect. The trade setup was very perfect. Nice trade setup. So you see, when all the time frames are pointing up, you need to follow the trend. Don't go against the major trend. You get it? So let's look at Euro card too and see what's happening. So mostly this exhaustion pairs I don't normally. So you see, yesterday as I drew, this level is what? So if you guys can remember, I told you this place is no trade zone. You see how price got to the level, exactly on the level, got rejected, and price came down. So it's important for you to understand how to trade. It's important for you to learn how to what? Identify the various rejectional levels. Note how to identify them. So you need to understand how to draw the various levels. So the exotic pairs, mostly I focus on the major pairs, the major currency pairs. I don't normally focus because when you trade the crossing or the minor or the exotic pairs, the spread is very high on them. So on the monthly time frame, these are the various rejectional level at the monthly time frame. So looking at the weekly time frame too as well. So on the weekly time frame, we're having this rejection. Okay, having multiple rejectional levels. Because this level was coming from the monthly time frame. So moving to the weekly time frame. So the weekly time frame is what, a downtrend. Price was consolidating. You get it. The moment price broke out, it turned to what, a downtrend. Price came and retested on this one. So price is currently what on a rejectional level. At the daily time frame, the weekly time frame is a downtrend. The daily time frame is as well what the daily time frame is as well an uptrend. The daily time frame is an uptrend. So price is currently heading towards this rejectional level. So moving to the H4, so the daily time frame is an uptrend. Looking at the H4 time frame, so price broke out. You get it? Price broke out, making a retest. So this is where it's made a retest. So you see this setup that happened on what a USD card is the same thing happening over here. Price currently made a support, a resistance over here. Price created a resistance over here, gave us a resistance. What are you expecting? A trend continuation. By the times that it happened was very bad. It happened during the Asian session. Okay, so this one would have been a nice setup too as well. This one would have been 16 pips. But if not this one, it would have been a nice setup. You get it? It would have been a nice setup. By this monthly rejectional level distracted everything. Okay, so expecting price to continue down. Okay, so now there's no entry, even though the daily time frame is an uptrend. So if you trade this kind of setup, it's just a rejectional level at what? The daily time frame. So this is just a rejectional level. So there's no entry on Euro card. You get it? There's no entry on Euro card. Okay, there's no entry on Euro card. So if you have a question, please kindly drop it in the chat box. So normally I focus on, let me add USD card to the play. So I think the major players are to my watch list so that it will be the majors. USD card was looking good. USD card was a nice setup. So yesterday this zone, you were expecting it to get filled yesterday. So yesterday, even during the lending session, it moved very small and it came back again. So you were expecting it to move during the New York session, but it didn't happen. We didn't see it. It made a retracement, and during the Asian session, it tried to move up again, came back again, and the lending session. So now, as price has gotten to this side, I'm very sure price is going to get to this side. So the lending session has even opened. It was a perfect setup. It was a perfect trade setup. But you see, so that's what I'm saying. You need to have a pairs that you are always having an eye on them. Always watching them so that you don't miss trace on them. You get, if you jump into all pairs, if you are focusing on all pairs, you are going to what? You are going to be losing a lot of opportunity because you can't be watching all. You're having a lot of currency pairs, even especially the minor pairs. You have a lot of them. and the majors too, we have a lot of them. So always make sure you are what, having some pairs that you are focusing on. Don't be jumping into all pairs. Have some pairs that you are going to focus on, so that you don't miss out opportunities. So when Bitcoin break above this one, I think it will be a nice buy. When it breaks above this one, it will be a nice buy. So USD card was really looking good. So if you have a question, drop it in the chat box. If you don't have a question, so this is one of my setup, like the daily time frame, the weekly time frame is so these are the trade setup. You don't get it more often. The weekly time frame is what, an uptrend. The daily time frame, an uptrend. The H4 time frame, an uptrend. Broke out, made a pullback. At the same time, the H4 time frame is giving an entry. So the entry will be getting on what, the H1 time frame. So this is one of my A plus. I call it A plus setup. This is my A plus setup. All the time frames are up. So that doesn't mean the setup doesn't fail, but the chances, the possibilities of it happening more often, playing at the possibility or the probability of it happening more often is what, is very high. If it happens, it's going to play out. More often it's play out. So this is one of my favorite tree setup. My favorites. All the time frames were pointing from the weekly time frame to the lower time frames are all pointing up. So this is the point I would have what, taking the trade on. So price will definitely get to this side. Price will definitely get to this side. So this one would have been 1 to 1. Then this is the next rejectional level. So it's going to be very hard for price to break through because we're having this multiple rejectional levels over here. We're having one rejection over here. So it's going to be very hard for price to break. So have a pairs that at least select like 2 to 3 pairs, okay, and make sure it resonates with your strategy, with your system. Don't trade. Trading all pairs is going to just worry your brain. You can't. There are a lot of opportunities. So you see this morning there was an opportunity on USD card. You get it. So not all pairs are going to be for you. Make sure you've mastered some pairs. Okay, so that you don't miss out on it. So now if opportunity is happening on GBP USD, there's no way I'm going to miss it because it is a pair that I'm always watching it. I'm always having an eye on them. So there's no way I'm going to miss opportunity on GBP USD. If it aligns with the way I trade, there's no way I'm going to miss opportunity, especially to on USD CHF. There's no way I'm going to miss the opportunity. Yeah, because I'm always watching them. Even if the market is not active, I'm always watching them. Okay. So anytime opportunity presents itself, I'm going to what? Take it. So that's what you need to be doing. You can't be trading all pairs. You're going to get confused. It will lead to over trading, and what, it will even jeopardize your accounts. So make sure you are trading pairs that select only few pairs and focus on them, so that you don't miss opportunity on them because you're always watching them. So every time you have an eye on them, you get it. So this was a perfect trade setup, perfect one, a perfect trade setup. So if you analyze it first, you would have seen this opportunity. You would have seen this opportunity. So if you have a question on YouTube, you can drop it in the chat box. If not, so there was no opportunity to today. So during the New York session, we are going to be having this news event. We are going to be having core CPI during the New York session. We are going to be having a Bank of Canada restatement overnight rates. We are going to be having interest rates on card. The Bank of Canada press conference. So a lot of news events. Tomorrow too, same news event. So we are close to the festive season, so the market is kind of slow. Kind of slow. So you have to be careful during the New York session because CPI is what an important data. Don't go and gamble your money on this news event. Don't go and gamble your money on this new event. So if you are here, if you have any question, kindly drop it in the chat or we call it a day. So gold is currently in a range. So as I said, you need to wait for price to break above this one. Then we take advantage of the zone. Then we take advantage of the zone. So currently, that's what I'm expecting it to happen on gold. Okay, so if you don't have question, let's call it a day. Tomorrow you come again. So kindly go back to the chart and study the USD card move. So all the analysis that I did, is it advisable to be flexible when trading? So you flexible as in how? So please kindly expatiate your flexible that you are talking of. Flexible as in what? Flexible as in what? Explain. So I'm waiting for your explanation. Which of the flexible are you talking of? When your trade is going against you, can you change it? So you need to stick to your buyers. So when it comes to trading, so supposing maybe this trade before this move, this is the point I've placed my stop loss. Okay, this is the point. So this is my stop loss. This is a mindset you need to have as a beginner trader. This is my stop loss. This is my stop loss. Okay, so I place my stop loss over here. So if price is coming down, one thing you need to know, since price hasn't invalidated your stop loss, you need to still keep it. Okay, maintain your stop loss. don't 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 adjust the stop loss, because price can just move around the side and just move up again. So make sure if you have placed your stop loss over here, don't move it. Allow price to move. Price can be hovering around the side. Still keep it maintained. Let price still maintain. Okay. Price can, so respect your system until price has what invalidated it. When you get to the advanced level, you understand when to maybe, if price is not going to move in your favor, you sometimes sense it. That's when you are experienced. But if you are starting out, know when which place is logic, okay, for you to place your stop loss. So if price gets invalid, if you get invalidated, then you are wrong, because stop loss is basically, or it means that maybe if price is going against you, this is the level you want it to what, you want to be what, to be taken out from the market. That's what you need to understand about the market. You get it? This is what you need to understand. So if your stop loss is here and price is moving against you, don't move your stop loss. That is what we call maturity in trading. You need to mature. That's what we call maturity. So don't adjust your stop. Okay. Don't adjust your stop. Let price get close to your stop. Okay. Don't adjust it. And this is your TP. Let price run to your TP. Okay. So don't be saying flexible. So you need to always know when price is going to get. So it's always important to understand the markets. Okay, so the reason why I placed the stop over here is for a reason. I didn't just pull the stop loss over here for nothing. There was a reason behind it. So anytime price will come here, that means what, I'm totally wrong in the market. So you need to understand when you are going to be wrong. The reason is what, price is what, an uptrend currently. Price moved up. So the high has been broken, the low has been maintained. Price is trending up. So if price comes back, okay, if this candle comes back and break this one, that means the trend is changing towards a downtrend. Okay, I'm buying, and if price is trending down, I don't have to buy, I have to sell. You get it? So that's when it is going to determine I'm wrong. So it's always important you pay attention to that. Okay, you need to pay attention to that. So the USD card is already taken off. You don't have to buy. Okay, price has already taken off, so you don't have to buy. The best price or the best place you could have bought is at this level. This is the point. This is the best entry level. As you have missed the trade, allow it to go. Okay, allow it to go. This is the best place you could have. Now price has already moved, so you have missed the trade. So don't rush the process. All right, so we'll meet the same time tomorrow, same time. Okay, so I hope you took something from today's webinar. You learned something from today's webinar. All right, so see you all. Thank you all for tuning in. Bye bye. So kindly give a like if you have not liked this thing, the stream. Kindly give a like, and you can go back to the stream too and watch it again. And I think you can get value for it. So see you all tomorrow, same time.